All right, guys, CPI was just announced this morning. The market has surged because things came in better than expected. So, Mo, why don't you go over a little bit about what was reported? As you guys know, it's been a big fight against inflation. The Fed has recently been talking, and there's been a lot of talk about more interest rate hikes. Could this change that? Because the numbers came in pretty good. So go ahead, Mo.
So CPI rose 0.2% over the last month and 3% over the prior year from June.
Which was the slowest.
Slowest in how long?
A long time.
A year or something?
Yeah, a year plus.
Yeah, and that beat both expectations. I have the Bureau of Labor Statistics website up here, and you can see the seasonally adjusted changes by month. So let's see. This is my first time looking at this. Energy and commodities rose the second most. Okay, so electricity was the highest, but you can see the categories like utility, piped gas services fell big time. Fuel oil fell big time. Used cars and trucks finally came down. Look at that.
Oh,
it was
wow.
up, and then finally came down a little bit. So you can see that there are areas where inflation
and look at
is
the
certainly coming
12-month
down.
changes in energy.
Look at these. Look, they're huge.
So look at this, Mo.
And look at used cars and trucks. It's finally down.
Look at this. So this is year over year. This is all items, 3%, excluding food and energy, 4.8%. Because food and energy has really come down quite a bit.
Yeah.
So are there still areas of concern? Absolutely. Remember, Powell has said that he would rather overcompensate and be more aggressive on raising rates than be less aggressive and allow inflation to run a little rampant. Now, if you remember, when he appeared in front of the Senate and the House, people were attacking him saying, sir, do you realize for every 1% your 2% unemployment increase will lose 2 million jobs? And Powell was very clear when he said, I think that high inflation affects the entire country a lot more than, unfortunately, a couple million jobs being lost. It sounded heartless. It was not a very popular statement, but I think he was probably accurate on that one. I agreed with it back then, saying inflation affects the vast majority of people a lot more. He's taking a line from Volcker back in the early 80s. Now, a lot of people here are probably younger. I was born in 81.
Yeah,
but obviously
read about it.
Yeah, I've read about it. Volcker was not popular. You saw those rates go to 15%. He wanted to fight inflation because he knew that's what he had to do. And then the U.S. economy saw massive growth for the next 20 years.
And Volcker increased rates, then started decreasing rates, and then he had to increase rates again. And that's what Powell doesn't want to do.
Yeah, so Powell's goal here is to sit there and say, listen, I want to put this thing down. We want 2%.
We're going to keep rates high until we see it appropriate to start bringing them down. We don't want to raise them again.
So I'm speculating here, but this report just came out. And in the last couple of weeks, there were indications from a lot of people in the Fed that there were 2 more rate hikes coming. They had to have known this was coming out still, right? They're not oblivious to this. They had to have known this was coming out and saying, listen, even with this, there are still things they might not like. For example, strong labor market. Now you might sit there and get confused. Wait, why is a strong labor market bad? It's not bad. It's not good. It's just from where they were standing before. Just remember, 2 years ago, a long labor market was absolutely important. We're coming off COVID. Unemployment had skyrocketed to 15, 16, 17%, and then coming back down. But remember, low unemployment leads to inflation.
Right.
When there are a lot of people employed, there's a lot more demand for a lot less people who are unemployed. What happens to wages then? To get good employees, you got to pay more money.
Yep.
When more money is paid, there's more money being paid out to people. They have more discretionary income. They're going to buy more stuff. But second, when you pay a lot more money to people, the cost of your services and goods that you make and provide for people go up. So you've got to start charging more. Why are you laughing?
It's so funny because I've been looking at some construction projects around the house, and I see a lot of GCs come by and they say, yeah, my cost of goods is coming down, but my labor costs, they are staying where they are or going up still.
Yeah, so, I'm doing a house right now, and, quotes that I got a year ago are still going up. And when I get them requoted, they're like, listen, our labor prices are still high.
Yeah.
I look at the prices we pay for very basic jobs that 5-6 years ago were $12, $13 an hour jobs, and now we're paying $15-16 an hour. Just the way it is. I don't look at it as good. I don't look at it as bad. It just is. And you got to remember that if you look at the history of the United States, we've had deflation, we've had inflation, we've had massive inflation, we have high interest rates, low interest rates, and guess what? We still get better as a country. That's the big key here. Don't get bogged down. And this is what I want you to remember. Don't get bogged down in these minute points. We want you to look at all of this as a way of looking at the entire world and realizing that things are going to happen. And I just to let you guys know, I'm asking you to do two things. I'm very active on Twitter. I talk about a lot of these things. I engage people, so follow me there on Twitter. And also subscribe to our channel. Because what we like to do is, we're not these financial guys on YouTube who are just taking advantage of whatever's in the news and saying, the world's gonna end. No, what we're trying to sit there and say is, what does this mean about the future? The US, the Federal Reserve wants higher unemployment. I want everybody to hear this. The US Federal Reserve wants higher unemployment.
They've been very explicit about it too.
And they've been very explicit about it. As I said earlier about Fed Chairman Powell's comments at the House and Senate, they absolutely want, and this sounds counterintuitive. Why do they want high? Because of what I said. Low unemployment leads to higher inflation. It leads to paying more money. You all have jobs, or you might own a business. If you own a business, especially that employs people, you've seen that. If you have a job at a company, you've probably been offered other jobs at other companies paid more money. Mm-hmm. Or you've seen new people come in and going, wait, what's going on over here? Why are these people getting paid so much? That is the key there. Because when there's a tight labor supply, what I mean by that is a lot less people are unemployed. You got to pay more money to get the good employed or unemployed people a job. And that leads to inflation. And that's what Fed Chairman Powell is worried about. Yes, he's done a phenomenal job getting that inflation rate down. He got aggressive, not popular, but he got aggressive. And guess what? The funny part is the market's now above. I want everybody to remember, the market is now above the March 16th, 2022 level when they started raising rates. I think it was March 16th or March 13th or something like that of last year. The market is currently above that. So we went from 0% to so call it 5.25%. And the market is even. It went like this. Does that seem normal? Remember, guys, the whole reason for having high a market was the 0%. Now we're at 5.25, and the Fed is talking about increasing rates 2 more times this year. Mm-hmm. Think about that. We went from 2 years ago having home rates of 2.625 at its low, and now we're at 7% plus. And we we have the market back to where it was before all of this thing started.
Yeah.
To me, that just screams euphoria.
Yep.
When you see companies, we're going to do a couple of videos today. One of the videos we're doing today, the company's up like 400% year to date. 400% year to date.
Nice.
You're talking about NVIDIA. You're talking about all these other companies that are up 100, 200, 300% year to date. Come on.
206% year to date for NVIDIA.
NVIDIA is up 206% year to date. Incredible. Come on. Incredible. All-time highs for NVIDIA again. 52-week high. Oh, wait, 52-week high was June 20th, 439.90. Oh, losers. All right, so guys, inflation is a constant concern for the Federal Reserve. They want 2%. Now, you got to remember, historically, inflation's been 3 to 3.5% when you go back 100 years. So 2% still seems low, but you have to remember also that we're in a slower growth environment. It's harder for the U.S. economy to grow at the high rates it grew at in the early part of last century, or the mid part, or even the late part. Because as a country matures, it's harder to grow. You look at a country like India. India has an average income of like $2,200 a person. And the U.S. is like, I don't know, 60,000, whatever the number is. We are almost 30 times larger than India in terms of per capita GDP. So how are we going to grow? Is it easier for India to grow 10%? Or is it easier for the U.S. to grow 10%? It's pretty obvious there, right? India is growing at 6, 7, 8% in a bad year. And that's why I just saw a report the other day that said India will overtake the U.S. economy in 2075. I was like, really, that long? I thought it was going to be way faster than that. Yeah. They got 1.6 billion people, just like China.
Right.
So guys, I hope you guys take this as a learning lesson in this video. It's not about saying inflation's good, inflation's bad, higher interest rates are good, higher interest rates are bad. Of course, I have a bias as a real estate owner and a business owner, of course, right? But at the end of the day, if you're good at investing, you'll figure out a way to make money in any sort of environment. And that's what we're trying to teach here. A way of looking at things for a positive to them versus the negative. There will be more of a fight for inflation. There will be higher interest rates. There'll be a higher cost to own homes. Okay. Your income will probably go up along the way as these things go up. So guys, again, follow me on Twitter and subscribe to our channel. It's really important. I think you'll really enjoy it. And I appreciate your time on this video. Thank you.